Or the stock which I want to throw at you, Kunal, is SRF. It touched a 52-week high yesterday and it has gone up on strong volumes.
Yes, Nikunj, I think it's been on a very strong uptrend, not just in the last couple of days, but I think in the last few months as well. Stock has managed to maintain its upward trajectory. I think the volumes have also been very strong in in phases of uptrend. Stock goes into sort of a consolidation, but manages to come back quite strongly. I think on Friday as well we saw very good price momentum. We saw follow through yesterday as well. I think from a positional player, anyone who's holding SRF, he should continue to hold on. I think even levels of maybe 1900 or 2000 could be possible. But I think the only concern is that for fresh entry, I think fresh entry at this point would be a bit risky because of the kind of risk reward ratio which would probably open up at current level. So if there is any sort of correction going forward, then I think one could look at entering the stock there. But I think at this point of time, fresh entering at 1790 or 1800 levels would be a bit risky.
Mayuresh, good morning to you as well. Thank you for joining us. Let's start with oil marketing stocks. They were on a tear. HPCL, BPCL, IOC, all of them have closed at record highs. I don't think Mayuresh can hear me. Okay, I think his earpiece, there is a bit of a challenge. Siddharth, which is the strongest OMC stock?
If you look at the kind of price movement we have seen, and not just yesterday's price movement, but overall, HPCL is looking quite attractive. It did consolidate in last 2 months from July onwards in a range of 380 on the lower side, 420, 430 on the higher side, and now we are seeing that kind of movement where probably the counter can move higher. So this would be preferred bet if at all I have to choose from ONCs. But this is not the space where I'll be active in current market scenario.
Right. Okay. Couple of other stocks which could be in focus, and Lupin also could be one such case in point. There are reports indicating this morning that they are perhaps weighing a bid for Bayer's dermatology business, so look out for that. Having said that, chartically, if you look at two stocks from yesterday's trade, they really got pretty pounded. So ICICI Bank was one such case in point, and the other one, of course, being ONGC. And CK, just want to get your thoughts on the chart pattern in ICICI Bank. And does it seem like we could continue to see red? I mean, it was pretty damaging the way the stock fell yesterday.
Yes, I would tend to agree with that assessment, Aisha. I think ICICI Bank seems to have completed its run to the upside, and with the overall banking pack under some pressure, this along with Axis is actually leading things down. The entire private sector bank space has been a little iffy, leaving aside HDFC, which of course remains ever lofty levels. But Yes Bank, Axis Bank and ICICI Bank, these are the spoilers, and within that pack, ICICI Bank suddenly has developed little downside momentum now, and perhaps we could see a little more decline before it reaches some sort of support zone. So I would continue to retain a slight bearish bias for the day as well as for the next couple of sessions on ICICI Bank.
Kunal, Marksons yesterday picked up very smartly. Is there a trade there?
Not really, Nikunj. I think it's still reeling below its longer term moving averages. In fact, I just had a look at the chart yesterday as well, post that kind of news, but not really in terms of a trade. The stock has already risen almost 10.5% yesterday. The longer term structure is still bearish. There could be chance you might see some selling pressure emerging just around the 200 moving average, which I think is closer to 55.5 on Marksons.
Okay, Mayuresh, the one stock that you like and has been relatively active as well of late, that's BEL. What's your rationale behind this one? Well, I don't quite think Mayuresh is still getting audio. Mayuresh, the question was to you on BEL. I believe you have a buy call there. Walk us through the rationale. Okay, no apologies there. We are going to try and fix that audio with Mayuresh. I'm not quite sure if he can, really catch our audio. But to you then, Himang, what else is on your buy list this morning?
Well, Aisha, in fact, for BEL, there was a recent analyst meet, and what we've, heard is that though the overall opportunity is very big for the defense and the, kind of capex that the company has done, there is a bit of a tone down in terms of their growth expectations, at least in the next, let's say, 1 or 2 years. So yes, it's a good stable stock with a decent amount of growth visibility at a very high margin, almost debt-free company. But the fact of the matter is that this entire defense thing is taking a while to play out in terms of growth numbers. So though some people are excited, we also have a buy coverage. We are looking at about 12-14% kind of an upside from current levels. It could be a bit of a slow mover from here on. And in terms of the themes that one can really look at, I think tire continues to be the best theme that one can really look at. So if there is any kind of a correction in stocks like Sept tire or Apollo tires, we think that that would be a great opportunity to enter because they are entering into a sweet spot.
But why do you say that? Rubber prices have gone up. We know that in general auto companies are completely dependent on rubber prices. So that one-time tick which auto companies got in 2015 because of drop in rubber prices, that's behind us now.
I think rubber prices going down was one of the triggers that we were looking at, and our sense is that at least in the domestic market, the rubber availability and the rubber prices both are quite stable. And if you look at the kind of volume growth that these companies are talking about, it's humongous at about 12 to 15%, and this is only OEM. There is going to be a decent amount of replacement market as well. And some of these companies, let's say Seat is operating at a capacity of 90%. So we think that operating leverage could kick in a big way. So we like Seat and Apollo tires for a decent upside from current levels.
Well, IRB is the other stock which could very well be in focus today, considering they've got the NHAI award for about almost 2100 crore rupees highway expansion project. So look out for this stock. This may just show you some traction. CK, to you, I'm not quite sure how closely you're tracking the moves in IRB, but how would you look to trade this one today?
IRB is something that I had made a positional call the other day. I think IRB has just had a great breakout from a very, very long term. I think it's a 2.5 year kind of consolidation. June 2014 or thereabouts was when it first reached about 275, and ever since that the stock has been locked in about a 20-point range. And it's only recently that this had also formed in a pattern of a channel, and that channel has come in for a breakout. And more interestingly, there is increase in momentum, increase in the price action slope, increase in the total OI position in futures, increase in volume. So I think it is sort of checking all the boxes as far as an uptrend is concerned. News flow is positive. So my sense is that IRB is probably heading up much higher to, I would think, 285 to 90 if somebody is a patient trader. It's not a go-go stock, so don't expect 5x in single days. I think it's a stock for somebody who would like to buy and hold it.
Well, alright, the pre-open rates are coming up on your screen. SGX is up 15 points, so we will be in for a decent start, and I guess that is what we wanted. You don't want too many big spikes, on the upside or on the downside. Let's be real here. Markets are looking slightly tired. Even though we've come on the right side of the liquidity event so far, and since markets are obsessed with global liquidity and BOJ and US Fed have done nothing damaging, yet markets are getting tired. That just worries you. So you could ask yourself that if markets are getting tired when liquidity is at best supportive and strong, so maybe that is an indication that we what could be called as a near-term top, so to speak. Valuations, well, they've never been on our side, so no point in debating and discussing that. But in general, if the global landscape has not changed, and if markets are getting tired, for me, that is lost of inertia, at least for the moment. I mean, this could very well change in 2 or 3 days, but for the day or for the week, it appears that bulls have to muster a lot of strength if we have to scale past key levels.
Yeah, indeed. Just a couple of stocks. Let's just check in on what Z is up to today, considering there are reports that they may be looking at buying TV9 and increase their Telugu presence. Zee starts off with a gain, just marginal one at that, while the market per se has started off just very, very quiet in trade. But, well, you know, you'd have to say that's a bit of a relief coming in, considering what US markets closed with or what Asia was doing earlier this morning was a starkly different picture and deep in the red. Lupin, that's the other one which is in focus. There are reports that they're going to weigh a bid for Bayer's dermatology business, so look out for that. Starts off with a good gain of about almost 0.6%. And Reliance, after making that 7-year high, let's revisit that story and see whether or not there is a follow through. Yes, sure enough, there is a 1% uptick coming in for Reliance. BPCL as well, and HPCL and IOC, they all turned out to be big winners yesterday in an otherwise weak market. HP, BP, IOC is still in the green as we speak, and Wockhardt as well has been seeing quite a bit of traction yesterday too. This was a winner. Just want to check in on Jubilant Foodworks and ICICI Bank and ONGC, really considering the sluggish moves or rather weak moves coming in these stocks. ONGC just about arrest the fall, though ICICI Bank still has started off with a minute bit of red as we speak on the stock. Neeraj?
Yep, that's the long and short of it. I think we'll also get your brokerage opinion going, and remember we've spoken about IRB, we've spoken about the key takeaways from Idea Telecom as well. So a bunch of these stocks have been discussed, and I think they'll all be reacting. By the way, at 79.20, Idea is trading at fresh 52-week lows. So we may talk about how there might be an uptake at some point of time. This will not be, the disruption will not be that scary, but right now telcos are taking it on the chin. Yesterday I think they were all sell calls. Just before we get back to the fundamental chat, yesterday they were all sell calls. CK, come in with Idea at fresh lows. Bharti was a sell call from you yesterday. What is your position this morning now that Idea is a sub 80 and Bharti too is open slightly skittish?
Well, I think around 80, 79, 80 Idea may certainly slow down, because you have to consider that it's been falling from 100 rupee levels, and it's had an erosion of 20-22% already. So I don't think people are going to come in and slam it now, especially now that they are making some noises. So that might kind of bring a halt to this. So possibly the bearish forces might turn their attention to either Arcom, which has actually broke some near-term supports, or even to Bharti, which again, like I said yesterday, is in the process of breaking near-term support. So I think the bearish forces might want to shift their bazookas away from Idea now on to Bharti and Arcom.
Arcom, Idea, Bharti, folks, let's be real. When disruption is real and when disruption is staring at you, the incumbent players, they will always suffer. So I mean, no prizes in guessing that telecom stocks which have been ranked underperformers, they will continue to underperform. The balance sheet size for all the incumbent players, that has got bloated, and that will get only bloated more because of the spectrum auction. And since pricing power is missing and everyone wants to gain more market share, you will see pressure on pricing, margins will come down. Whatever is good for consumer is never good for the industry. So these groups, these stocks may appear, that they've corrected, but there's no reason why one should rush to buy into some of these telecom stocks. At least retail investors should avoid them. I mean, there's a bull market in consumer, there's a bull market happening in some cyclical names. Associate with them. No point in buying telecom stocks where we know that problems will only magnify. Mayuresh, quick 30-second answer on telecom.
Agreeing to all the aspects that you've spoken about, and this is entirely the thesis that we had put through, with leveraged balance sheets, with cash flows not improving, and with new competition coming through from Jio, specifically on the pricing front, you're going to see huge pressures in terms of their earnings, probably actually not improving at all over the next 2 years. So the underperformance, as you rightly said, will continue for telecom stocks.
Mayuresh, are you getting a sense that markets are getting slightly tired? As of now, markets obsessed with liquidity, and even though we've come on the right side of BOG and US Fed, and liquidity will remain abundant, so if the core of the market, which is liquidity, has not changed, yet if markets are struggling, to my mind that is an indication of fatigue.
Well, yes, absolutely. And look at the moment that you've probably seen, both in large caps and mid caps. I think the moment has been quite tremendous. And largely, again, I think you're looking out for events that will probably come out over the next few weeks. The market's probably looking for triggers to take it higher. The US presidential elections will keep the global markets volatile, and the riskier assets, including equities, are going to be on their toes. Having said that, probably India, again, I think, and we've been discussing this time and again, stays on a strong footing in the emerging economy pack. But largely, I think we will be swayed by how the global markets and the global mood is. So yes, I think in terms of both valuations as well as stock movements across large and mid caps, I think the moment has been quite sharp. So the markets are taking a breather. So I think if we consolidate, I think it's a healthy sign for the markets.
Mayuresh, just going through some of the other strategies that you have, and BEL too is a stock that you really like. Tell us, why is that?
Morning, Aisha. I think we've been liking BEL from lower levels as well. And the entire thesis has been the kind of defense spends that the central government is doing at this point of time. $50 billion worth of projects have been cleared by the Defense Acquisition Council, and it augurs well for defense companies based out of India. What it does basically for a stock like BEL, which is 35% share in the domestic defense equipment business, is that greater order flows will start coming through. Yes, the results were a little bit dampening this time around, specifically on the EBITDA front because of the negative operating leverage playing out. But largely our own take is that order flows will be quite robust. And even if you look at the current order book size of 32,169 odd crores, that's almost 4.5 times its trailing 12-month revenues. Going ahead, I think the management is extremely hopeful, and we remain optimistic as well of a 10% top line growth over the next few quarters. So by FY18, our own sense is that the EPS should be anywhere close to 62 odd rupees. And with a huge order book, with the kind of revenue visibility that BEL has got, the execution thereof, which created problems in Q1 because of delaying customer clearances, I think that should start improving, and that will have a healthy sign even on the EBITDA front, which should get maintained anywhere between 17.5–18%. So largely, yes, I think I remain optimistic on BEL within the defense space.
Okay, a bit later in the show, of course, at about 9:20, you will hear out from Mark Mobius, and the reason why this chat is different is because after a really long time, or probably for the first time, he's talking extensively about small cap investments. So don't forget to tune in at 9:20. A bit later on in the show, of course, two of the largest corporates will be speaking. So in a single show, you hear out two Nifty 50 names, AM Nayak from L&T and Umang Vora from Cipla, in his first interaction ever since the change of guard happened. So do watch out for these names as well. However, the first 8 minutes have settled, and quickly let's just look at what the index is going to be up to. Maybe about 1/3% in the green, with Reliance leading the charge. Grasim actually leading the charge. I'll rephrase myself, up about 1%. Tata Motors, DVR, Hero MotoCorp and Yes Bank bring up the rate sensitives. Not too many losers, so that is actually not a bad thing as well. And in terms of mid caps, I think again not too many newsmakers moving up. Maybe an IRB Infra, which on the 2100 crore order book or order receivable is up about 2.4%. Hemang, any investment ideas from your end?
Well, we have been talking about these NBFCs, and within that, I think L&T Finance Holding is one of the ideas that we have recommended recently. And the reason why we like this stock is because, recently they have undergone a change in the business strategy, and they have identified 3 ideas or product categories to focus on, which would be rural finance, wholesale finance, and housing finance. So there is going to be a decent amount of scalability and ROE going ahead. They have a good legacy, and we also believe that the way their product mix has changed in the last, let's say, couple of quarters, wherein they are focusing more on the B2C segment, where the component of that has gone up to almost about 80% from 40%, which would bring in an element of stability. So, in a space where most of the large cap good quality names are trading at about, 3 times to almost about 5 to 5.5 times, this stock is available at about 2.2, 2.3 time price to book. So there is a case for some kind of an uptick from current levels.
Well, the other interesting one from yesterday was JNA Axles, a strong debut at that and a strong finish as well, listed at a hefty premium and stayed put even amidst all the market weakness. Mayuresh, is JNA Axles a story that you subscribe to, or do you like that one?
So again, Ash, I think at the subscription price, I think it was very attractively placed, more or less with the kind of business model that they've got, market leadership position in rear axle shafts, and going ahead as well with the kind of proceeds getting used for purchasing of new equipment and probably refinancing of the working capital requirements. The interest cost and finance cost on their balance sheet will keep on coming down. Yes, I think the export component at 55% gives some kind of a solace, and again, I think the kind of clients that they are catering to. But largely, I think it was the subscription price which was attractive at that point of time. Now it will all point down to how numbers start coming out, Aisha, from Q1, Q2. So at this point of time, I think investors who have invested into the price or in the stock should stay invested. But largely, I think Q1, Q2 numbers will determine the trend of the stock going forward and the multiples getting increased thereafter.
Okay. A mail from CLSA has hit my mailbox, and they believe that TCS is a high conviction buy. The structural strength is intact. They are best positioned to monetize the entire digital opportunity, so to speak. Imang, is it time to be a contra buyer in IT? The concerns are out in the open. Profit warnings are in public domain. What could go wrong? Whatever could go wrong, I guess, has gone wrong.
I think that if you have a 1 or 2 year kind of a perspective, definitely some of the IT names one could really look at buying into, particularly TCS and HCL Tech, because this entire last, let's say, couple of quarters where we are hearing concerns with respect to Brexit, currency movement, and the fact that the companies which have high exposure to BFSI space are struggling. We think that these companies can easily give a growth of about 12 to 14%. And even if you look at the ROEs for, let's say, something like TCS, they continue to be at about 30 to 33%. So I definitely think that there is not a case for too much of a downside from current levels, but because of the US elections and rhetoric, one cannot rule out some more volatility, but we continue to be buyers there.
Okay, that's a call coming in IT in particular and Tech Mahindra. Hemang as well as Mayuresh, and good chatting with you as always. Thanks for joining in. Let's just recap the trading ideas then coming in this morning from our chartists. And CK Narayan's got a low risk strategy, a buy on Coal India, that is. And he also has a high risk strategy, which is a sell on Just Dial. Siddharth Bhambre, well, a low risk strategy, a buy on Dr. Reddy's today, and a high risk one, which is shorting LNT. Kunal Bothra, and 2 low risk strategies from him, a buy on Muthoot Finance as well as a buy on Coal India, and he also has a buy on IDFC Bank.
Okay, Kunal, if you had to choose one out of these 3, which one would it be?
Well, from a trading perspective, I would choose Muthoot Finance with a target of 383, stop loss 360.
Okay, Kunal's top pick, Muthoot Finance. Kunal, did you say Muthoot Finance?
Yes, Muthoot Finance.
CK, what about you?
Well, I would choose a buy on a Coal India. I think low risk strategy in a market which is devoid of too much momentum is the way to go. So long on Coal India, 332, stop loss 328, targeting about 340.
Okay, and Siddharth, your top call?
Well, I'll choose shorting LNT. That's where I have seen substantial amount of formation of short positions. Target 1385, stop loss 1510.
Right, 50 seconds to go. US markets have managed to come back after the first US presidential debate, even though it's a close fight, and November is still about good 2 months away. As of now, markets are saying it's status quo, and let's not get worried about the outcome of the US presidential election. Some newsmakers, Z Group is likely to acquire TV9. That is a media report, and that could have an impact on Z. I mean, Z is clearly looking at getting out of the businesses which are loss making and adding more to the bouquet. Saturn Care Credit QIP fully subscribed. There is a rage in the NBFC space, and anything and everything now seems to be getting a top down subscription. Then IRP Infra has got NHI award for 2100 crore for a highway which could be a 6-lane project. First rates, it's not a bad start, 87.49 for the Nifty. For the Sensex, the first rates are equally heartening, and the needle also has moved on the Bank Nifty along with the small cap index. I want to address first the top rated counter on both the exchanges, and in no particular order. There is Unitech followed by Marksons Pharma, Ad Labs, which has seen 2 days of strong uptick, that seems to be hitting the pause button today. Satin Credit Care, the QIP, not a large QIP, but that has got fully subscribed and that one is looking strong. And then IRB Infra, because of that large order, seems to be trending up very, very smartly. Now when it comes to Nifty specifically, I think it's the large cap names. The Bank Nifty is looking okay. That is also making some of the large cap names look decent. So ICICI Bank, it's trending up on strong volumes. The price action may not be there. IDFC Bank, mighty mover, we tend to ignore this one, but IDFC Bank is at 111, 112, and I want to go back to TCS. Is the TCS, is the CLSA magic now there on TCS? Yet it is. It's a large cap stock, 1% for TCS on a day when there is no news flow. I think it's a decent start for that one.
Want to check in on Reliance definitely and see whether there's any follow through after the stock managed to hit a 7-year high for itself, and today too it's climbing higher. 11.18, a 1% uptick for Reliance, even though that the government is expected to cut natural gas prices by about 18%, but most experts believe that A, that was much expected, and B, it's already built into the numbers for Reliance. So really, clear headway really for Reliance, another 1% uptick coming in the stock right now. IRB Infrastructure, they've got the NHAI award for 2,100 crore rupee highway expansion work. IRB Infra gaps up almost a 3% uptick coming in there. And Lupin is the other one, wherein reports are indicating that they are set to bid for Bayer's dermatology business. So look out for Lupin as well. 0.5% uptick coming in there, and not bad a start for the market overall as well after what transpired yesterday and the recovery that we've seen in global markets post the US presidential debate wherein there hasn't been much takeaway really for equity markets, or for that matter world economy, so to speak. But yes, a recovery of 100 points in Dow futures, and that seems to be rubbing off on us as well. So taking cognizance of those positive cues coming in this morning. Besides that, let's also check in on what ICICI Bank is up to, what ONGC is up to. Remember, these were the big cracks yesterday, whether or not there's any follow-through selling coming in on Jubilant Foodworks. ICICI Bank has stabilized around those 263 odd levels, but again, these are just very flattish moves in early days yet. Jubilant sees some green. 966 is where the stock is right now, and I quickly want to revisit the OMC bag as well, considering they, along with Reliance, really were the saving graces yesterday. So HPVP IOC today too, they're holding out quite smartly in trade.
Indoco Remedies has a downtick on about 32,000 shares traded. Actually, I correct myself, but down about 7.5%. Do watch out for that one. Actually, 8% now. So watch out for Indoco Remedies. Mukta Arts has had going to spin off the cinema division into a subsidiary. Maybe people believe he's already planning the stage for value creation later on, but Mukta Arts is buzzing on that piece of news. I couldn't find anything else. This one, the big mover. There's an uptick in global spirits today. Remember yesterday, the liquor stocks had a fairly decent outing even on a bad day for the markets. Global spirits moving up a little bit in the session today. BPL continues to rise and shine. 6 lakh shares traded in the first 4 minutes. The stock is at a new high, 95.80. City Cable has a bit of an uptick to itself. Good going there. Camlin Fine up about 4.5%. There's individual names, and remember we had a refractories discussion yesterday. Orient Refractories, the volumes are a bit suspect. Just about 1,000 shares on the NSE. The stock has just started to inch up a little bit in the session today. So that's the other one. But the index up about 1/3%, which is not a bad thing. And Z Entertainment top of the draw. But the rate sensitives are not far behind. Bajaj Auto, Axis Bank, Yes Bank are having a good day. So yesterday the banks got pounded a bit. Today I think just taking a bit of a breather. Actually a bit of an upside as well.
It is not a bad start.